everyone. Welcome to another episode of the Real Financial Freedom Podcast with my friend Long. Hey, how are you?
Good. How about you?
Good.
Glad to be back.
Yeah. In this shifting market.
Yeah. It went from a seller's market to a buyer's market in the blink of an eye.
You know that video, the meme of what's his name, Will Ferrell?
Yeah.
Like, wow, things escalated
Really
fast.
quickly. Yeah.
Boy, that escalated quickly. I mean, that really got out of hand fast.
Well, that escalated quickly.
Yeah, things escalated. I was watching that the other day. It made me laugh. But
yeah, it's crazy how the market changed. But
I mean, I'm not really shocked either. You know, what goes up must come
down, at least for a little bit. I mean, the momentum was just crazy last year. I think it was just a freak of nature almost. It just went up so crazy. But now it's a course correction. And this is last year. I remember everyone we talked to, we're waiting for the crash. Or if you see online, everyone's like, I'm waiting for the crash. I'm waiting for the crash. Well, there won't be a crash. We all hope, but there's no way. I mean, judging by history, there won't be a crash. But it is a course correction, which is good, and this is what people have been waiting for. People's like waiting for the price to drop. It's dropping. It's gonna drop mostly again September after another.
It will drop
hike.
more. Yeah. I mean, yeah.
But now's the time to buy in, and pre-construction projects now are getting more incentives. You can buy in now instead of like before. It was one project where we were fighting by tooth and nail to get a unit there, but nothing could, it was just gone. Like literally a day, the one bedrooms would be gone. But now there's more room for people to buy, and get more extra incentives. Like one builder is giving 7.5 deposit
and way better deposit structures too, like a lot more flexible, right?
Exactly.
There was the one project that we've been working on, Muskoka and Aurelia one.
Yeah.
And when we bought in Aurelia, the deposit structure was the 12% within 4 months. Now they've scattered it in a whole year. It's I don't know, 7 different or 8 different checks or something.
Yeah.
So it's beneficial to the buy, and you're getting a lot more time, and you're getting way better prices.
Exactly. Again, this is not the builders. They're not even dropping prices. They're just not raising prices as fast, right? Before, it'll been raised by 50,000 by now, but now they're just not raising as much, like maybe by 10,000, 20,000 pricing. But this is the thing that everyone's been looking for, right? When in times of harshness or times of difficulty are the times when opportunity comes, and this is the opportunity I think that everyone's waiting for. But of course, everyone's being a little more cautious, but you should approach things in life with caution, but with at least a sort of determination to act, right?
The only thing is, I do feel for the sellers that when this first happened, they had already bought and they had to go on the market and they got stuck in that limbo. So, there's always one side of the coin that gets hurt more. But for years, it's been such an unforgiving market for buyers, and buyers had to fight, get into crazy multiple offers. But those sellers, obviously, they become buyers too because they're usually selling and buying. So everybody was feeling it. And there was just a lot of uncertainty in the market. And people thought real estate agents love it. I don't personally love a market where I have to compete with 40 other offers. And also, I can't advise my clients properly. I have to not push them, but the truth is that they would never be able to get into that property without with conditions like finance and inspection condition. I truly believe that buyers should have the option of putting in an inspection, especially first-time home buyers who don't know what they're getting themselves into. Inspection is not only are you finding out what repairs you have to do, it's education too. The inspector is going around the house, showing you everything about the house, all the things that you need to fix, all the things, and just basic education about your house.
Yeah.
And the fact that buyers didn't have the option to do that, it sucks. So it is what it is, and everybody kind of saw this coming. I don't think it was, a surprise to anybody that the market was going to slow down. This is a very natural progression of the economy. We didn't think that it was going to be a seller's market forever where everybody was getting for. I don't even know if anybody, whether you're a buyer or a seller, felt comfortable with the way that things were moving.
It's just moving too fast. The problem is even if you sell, you have to buy another place and prices were high, you have to compete again. It was a tough time for everyone in general, I think. And but now that it's cooled down to reasonable levels, I think now is the time where people have to really consider, like, do I want to miss this opportunity or not? Because of course there's risk, but then there's risk in everything you do, no matter what you do, but you have to analyze the risk and then just jump forward with it and be prepared to do whatever needs to be done to go through with it, right? For example, right now, yes, prices are down, but then mortgage rates are so high. So then your mortgage rate borrowing power is a lot less. Before, let's say you're able to borrow $600,000. Now, if the increase, maybe it goes down to $500,000, $400,000, depending on how things are. So that's the one thing with it. But right now is opportunity for you to buy what you can, right?
Yeah.
Like a lot of times I find, like, speaking to clients, and I'm sure yourself as well, the perception is I'm gonna save enough to buy that dream house or my forever home. But that's not the case with this current economy or even this current stage of life in big cities, right? You have to buy something you can afford, and now this is the time. Like, this is your foot in the door, right? This is your way to say, hey, I'm gonna do whatever I can. I'll buy a cheap house. I'm gonna either renovate it or buy a condo, whatever it needs to be done. Get my foot in the door. I'm gonna just suck it up, pay that extra mortgage rate now, and maybe go out less, spend less on here, really manage your finances. So then 5 years from now, you are going to be very well positioned over everyone else who didn't buy.
Like, the mortgage rates right now are not nearly as bad as what they were when my dad bought his first place. His interest rate was something like 11%, or
it's a double digits.
Something crazy. Yeah, it was insane. So when we talk about these rates, first of all, we're comparing it to what COVID rates were, which was historically low.
Yeah.
And not normal.
Yeah.
And we are also talking about super inflated prices, which again was not the real, I don't want to say the real value, because the value of a property is what a buyer is willing to pay for, but it was inflated prices. So now the prices are just kind of stabilizing into what they should have been to begin with. So we'll kind of see how things go in the next few months, but I am telling my buyers to be more conservative. So yes, it is a good time to buy. It is a good time to get into the market. It really depends. It's case by case. Like, if there's an investor who has cash to buy, they're buying all cash. They're not victims to the interest rates. But if somebody is relying on a mortgage or banks, then you kind of want to take that into consideration. It's kind of hard to time the market. No one can time the market. I personally have never been able to. There are times where I bought at the perfect time, sold at the perfect time, and bought at a okay time where if I waited, maybe I would have done a little bit better. But I don't care, because it's a long game, and if you try to time the market, you just won't do anything. But I do want to say, that's because I'm in the real estate market. I'm so much more comfortable with being able to make these moves. I do want to sympathize. I am sensitive to the fact that buyers out there, they're seeing like so much media coverage about housing and crash and recession. Like, I log into my Instagram and all I see is like crash coming, recession. Oh my God, go hide in your homes, like, bury your money. Yeah. And it's like, of course people are going to be nervous. So I do think that people need to be a lot more conservative and be very selective, but decide what you want to do. And remember, some price range homes, they're not going to drop that much. So there's really no point of waiting that much.
Exactly. Like, and when people say inflated price, I mean, I agree it was inflated, but I think it was inflated to as in push to future trends. Like, for example, the current pricing last year was probably should be Toronto maybe 5 years from now, right? Like 6 years from now, but it just jumped that fast to within like a year, right? Because Toronto, when people say Toronto pricing inflated, is it really inflated though? Because any big city, right? Any big city is naturally progression of real estate values go up, right? And you want it to go up, right? The only problem is with the current, maybe monetary, the way our people paid hasn't gone up, but the housing has gone up. But that's natural for any big city. For example, New York, London, both comparable cities to us, most comparable cities to us. They're going to $3,000, $5,000 a square feet.
Yeah. Oh, yeah.
For a closet, like literally for a little closet, and then you're paying like $3,000 a month for this closet, right?
We didn't even make it to the most expensive city. I was watching.
Yeah. No, we're not even close to expensive cities.
Let me bring it up here.
Yeah. So like when you look for that numbers, like if you think about like that's the natural progression. We're gonna go there. We're gonna get there one day because we're still developing. So many areas are developing. Danforth's developing. Vaughn's developing. Yorkdale area is developing. All these areas are developing, and when they're developed, right now the prices are lower than what they will be because once those areas develop more, guess what's gonna happen? The values will be a lot more.
Yeah.
Right.
Yeah.
So we are headed towards that trajectory, and you yourself have to like people not yourself but people have to be aware that that is a trend we are going to hit.
Yeah.
And if that's a trend we're going to hit, then these are times when you have to really bunker down and say, hey, I'm going to buy something now. So one, it's going to be for myself. Two, it's going to be for my family and for my kids, because as things progress, the new generations aren't able to buy in very easily.
No, the wealth gap is growing so much, and we are becoming a rental city. Like most people are going to be renting here, and it's going to be a small percentage of people that own properties or that are landlords. I'm specifically talking about investors, but even home ownership is getting really hard for people. So
same thing like in New York, London, like, you know, home ownership isn't for a lot of people, and like that's just unfortunately the trend because you have the limit of resources, right? Like limit of space to build. So, and we will hit there like eventually, right?
Yeah.
So now's the time, I think. But of course, carefully, as you said, you have to be careful. So you have to like look at your finances, make sure you can hold a mortgage, or if you, let's say you're worried about a mortgage now, pre-construction.
And you know, I want people to be cautious because I often talk about properties that you could Airbnb short-term rental, because that's what I do. Now, if I was buying a property right now for a short-term rental, I would also make sure that if I had to convert that into a long-term rental, I could still be making money from it, at least have my costs covered, because you never know what's going to happen, right? Like Airbnb can shut down, or the city could start restricting Airbnbs, and then what do you do, right? So you always you have to be really careful if you're going to be going into investing. You have to make sure you think about these things. You think about city restrictions, landlord tenancy laws, like all of that will make a huge difference in your experience.
I always like who told me, always think worst case scenarios, and then you'll always be able to plan better. Right?
Absolutely.
You hope for the best, but plan for the worst, right?
Yeah.
That's the basic philosophy, I think, of mostly anything we do with anything with risk, right?
But right now is a good time. One other option for buyers is the seller take back. So seller take back is when you have when you approach a seller and you offer them to take back a mortgage. So they'll be the second mortgage, or basically private lending, a portion of the house price. So it could be 10%, 15%, 20%, and that'll cover some of your down payment if, you know, it's an option.
And that's the thing is, that's a great topic to bring up, because a lot of people don't realize about that option. Like a lot of even real estate agents don't think of that option.
There's a lot of creative financing that you could really tap into right now. Exactly.
And those weren't available because we're such a different market, but now these are available. And I think, you know, this is why it's important, I think, with a lot of people not to go with part-time agents is one thing, or like agents who don't have much experience right now, especially in this time. Especially if you're trying to sell a house or you buy a house or whatever you're trying to do, like there's agents out there who really are just part-time. They're not going to give you the full, they'll give you like, oh, I'll charge you 1%, 2% commission. Like a small commission, you're like, oh, wow, that's great. You save a lot of money. But then then your house is going to be moving. The person's not doing any advertising for you. They're basically just saying, hey, I'm going to list on MLS. I'm going to leave it. Someone's going to call me for showing.
No, I would definitely be very, very selective with discount agents, or even just picking an agent. It's not just about what they're charging you. It's about what they're offering you, what kind of marketing they're doing, what their experience is, what kind of database do they have. Like more than ever, you need to work with agents who have buyers, and who have a team that would be able to take that on. Because like you say, if somebody doesn't have the marketing experience and doesn't have the team to back them, and you know they're doing this part-time, what happens if a buyer calls you at 2:00 in the afternoon and you're in a meeting on your full-time job? Well, guess what? That buyer is gone, and now they're calling all the other listings that are available because we have a lot more inventory now. And the reason we have a lot of inventory is because we're now in a buyer's kind of in a buyer's market. So for everyone watching, I mean, not everybody is aware of what we're talking about, and I get that. So we were in a seller's market where we had a shortage of supplies, and we had a lot more buyers. So demand was a lot more than supply.
Yeah.
But now since the Bank of Canada has started to raise interest rates and people are going into panic mode because the economy is also run by a lot of reactions and emotional reactions.
Yeah.
So, people are trying to sell their properties before it crashes even more. And now you have a lot more inventory, and buyers are kind of taking their foot off the gas. First of all, it's summer. Buyers are also taking a break.
Yeah.
It's been so hard to be a buyer for the past 2 years. So that's kind of where we're at. So buyers have a lot more purchasing power. You can negotiate more. You can, not only are you negotiating your price, you're negotiating conditions, you're negotiating terms, closing date. Like, the buyers are in the driver's seat now, and sellers are starting to come to terms with that. But there's that transition period where sellers are kind of still stuck on their prices. Yeah. They don't want to let that go, and I get it, because if a house is 1.6 and now all of a sudden it's 1.3, that's a hard pill for a seller to swallow. I get it.
Yeah.
That would suck. I've been in that position, so I understand.
Yeah.
It's always going to be tough for one side,
Yeah, it's flip a coin. It's always be one's heads, one's up. But that being said, is you have to leverage what you can do and what you have, right? Mm-hmm. Like, for now, yes, sellers. The advice for now would be truthfully, in my opinion, if you don't have to sell, don't sell. Yeah. Right now, hold the line, hold the line, and just buck up. Don't worry, a year or two, and this is like worst case scenario, last 2 years, absolute worst case scenario.
Yeah,
right?
It'll last for a year and a half to 2 years, and then things will start to pick back up. I'm already seeing a lot of investors call me. A lot of my buyers are very interested in getting into the market right now. Listen, it's not like people are knocking on sellers' doors every day. It's a little bit more work to sell a property, which is fine. It is what it is. But one other thing I wanted to say was also what buyers need to look at is the total, on a macro level, what is happening in America, what is happening in Canada. You have to kind of look at migration. Where are people migrating to? Right now in the U.S., I can't speak super confidently, but I've been learning a lot about U.S. because I bought a property there. I spent some time there. I'm looking to tap into the Florida market. I'm very interested in that market because I know their population is growing. Their employment rate is going to go up. Their employment has been really, really good.
Yeah. Tax breaks.
This is another thing, right? They're very landlord friendly. And I find that America is kind of it's like that, right? Wherever there's tax breaks and they're landlord friendly, that's where most of the investors go. So places like Texas and Florida, and there was another Nashville, I think, is pretty landlord friendly. I don't know all of it, but their interest rates are higher than ours. Their inflation is a little bit worse than ours, I think. But overall, I think we're kind of all in the same boat. But you also want to look at that, population growth, migration. Those are all big topics, and if you look at that, then you can kind of decide where you want to invest your money.
And speaking of the migration pattern, we do have a huge shift in Canada as well. And one of the places we're selling right now as well is Calgary, right? Mm-hmm. And that's a huge migration pattern. So Calgary right now has become like Texas. Yeah. Where there's a lot of huge tax breaks, no land transfer tax, closing costs $1,500.
Yeah, it's crazy.
It's the only
land transfer tax in Toronto, just so everyone knows, if you're buying within the 416 area code, you're paying provincial and municipal.
Yeah.
And if you're buying outside of the 416 area code, so let's say in Brampton or Richmond Hill, you're paying just the provincial. It's thousands of dollars. So
it's a huge, and the prices are lower there.
GST is 5%.
It's honestly, Calgary is the migration pattern now for a lot of people to go. A lot more job opportunities. You have people investing from Vancouver. Now you have people investing from Toronto, Montreal, and they're all heading to Calgary because one, they're going. There's a small to medium business friendly area now, which a lot of businesses are going. They're starting up because they're getting huge tax breaks. Rent is cheap. Oh, not rent. Land is cheaper there. Rent's actually higher there. That's why it's good for investors right now. They're happy to go there because rent is high while you're buying land for cheap. You're buying your land transfer tax. All those benefits are cheap. So they're like, and plus some of these builders, one of the builders we work with there, they give 1 year rental guarantee.
Yeah.
Which is phenomenal for a Canadian or for like an outside city investor or any investor in general, right? If a builder's confident to give you, hey, 1 year rental guarantee, that means, hey, they're not saying they'll give you that rental for sure. They're saying, I'm confident you'll find someone to rent it, but in case you don't, here's this guarantee to make sure you feel safe. And right now, let's say if you have only, and this is great for people who have very low, not very low, truthfully 40, 50K is still a lot of cash, but you can't do much with it in Toronto, right? Like 40, 50K in Toronto, even a little outside of Toronto, like you're not going to do much with it, unfortunately, right? Mm-hmm. But guess where you can do something? Calgary. Well, $40,000, $50,000, you can buy a nice condo or possibly detached home, depending
like a townhouse or something.
Yeah, right. Yeah. And then, boom, your foot's in the door. And what's great about it, you can get cash flow. Maybe about.
They're the most landlord friendly province in Canada.
Exactly.
Yeah.
Right. And and then no rent control for investors. I mean, of course, it's bad if you're renting there a little bit, but on the other side, that's just what the progression of the area is, right? And
well, Toronto has no rent control for anything that's built past 2018. Yeah.
Well, and to be fair, like, there's two sides of, yes, I understand people need to place to stay, but also like the people who buy it with these mortgage increases, what do you think it's like when people see mortgage increases? Like, oh yeah, the people who bought, they're gonna suffer a little bit. Like if you see online and stuff like that, because they couldn't buy.
Haters.
Haters. And I was laughing. I'm like, but like you do know if you're renting, that's gonna transfer to you, right? Because
well, that's why rent is going crazy right now. They're getting. Like, people are getting multiple offers on rents.
Yeah, that's crazy.
I said this on a TikTok, and everyone's like, you're stupid. What are you talking about? And I'm like, no, that is what's happening right now.
That's exactly what's happening right now. Like, it's just fun. But that's the crazy thing about the market, right? Like, it shifts, and it's very fluid. And you have to be fluid with it, right? Like, so that's why, like, and when it shifts from seller's market to buyer's market, then you have to move along with that shift and just kind of bunker down and see what can you do now, right? And as it slowed down and on Toronto for housing market, it slowed down in Calgary as well. So builders, again, are a little more flexible. So especially for pre-con, so truthfully, if you're a young person and you have 40 to 50K saved up, right? And that money, that 40, 50K is not going to be worth the same amount right now than a few years down the road, then why not do something with it by parking it to like a great investment like Calgary, where they'll have the property manager for you. You're getting the rent. You're making probably $300 to $400 a month, which is, I mean, it's not high, but it's something, right? And then that's your gateway into real estate. And then from there, what happens is your equities goes a little bit. It's not gonna be as high as Toronto. It won't go as high, right?
It's gonna start getting up there though.
Oh yeah, it's gonna get there, but it's not gonna rise as fast as Toronto. But that being said, you still have equity now, and because you have that, you can go buy something else. Right?
Yeah, and they have a pretty strong rental market as well. Yeah, for sure.
And plus, you're 1 hour from Banff. That's always a bonus.
Yeah, that's true. Yeah. But yeah, I mean, I think anybody who's concerned about the market right now, just know that this is very natural progression of the economy. This is just what happens. Everything kind of goes like this. Like, it's always on up. It always goes upwards. It might dip a little bit and it goes up again. Dip a little bit and it goes up again. And that's why I always say buy and hold. Yeah. For anybody who's looking to flip, I would not do that right now. If you're looking to buy a property and flip in the next 6 months, I don't know, maybe there's some like superhuman, super duper flippers out there that know what they're doing, but it's a risk. It's definitely a risk. I would not do that. But if you're looking to get into the market, be selective, be conservative, do your homework, be patient. You don't need to run. You don't need to rush into anything. If you miss out on a house, it's okay. Another one will come up. Another migration that I've been seeing is like people kind of going just even outside of the GTA, like the project we had in Aurelia and Muskoka. I mean, those flew off the shelf. Like even right now and during uncertain times, like all of it sold.
Yeah, that was like within 2 weeks. It was also like
Less a week.
A week, yeah.
Yeah,
like
Muskoka
22 sold in
week.
2 days. 22 lots were sold in like 2 days.
2 days. So there's still, I guess people buying on that project also feel better that so many people are buying. But their prices were good, their incentives were good, their deposit structure was good. But yeah, I mean, it is an uncertain time. I would try to not listen to too much negative news, because that will get to you too. There's like millionaires are made in recession, and there's an opportunity in everything. Like what Warren Buffett says, like buy when there's blood in the streets. That's obviously like what he does.
Yeah, and like
but
he's smart, and like I gotta say, like, yes, don't listen to like how the, like I said, don't add emotion to it. Just look at the numbers, right? Like, when you look at the numbers, it reassure, because that's just logic. There's no emotion attached. It's just pure logic, right? If you look at it pure logically and look at 30, 40-year trend, it's always gonna have those little dips, but still going up, right? So right now, if this dip, don't freak out. Just know that you've done your research, and know that you just have to be more selective with your buying, and make sure that whatever you're buying, your finances can hold it, right? And I think for the buyers or anyone sellers who real estate people who do want information on the market with no emotion attached, our team does provide a digital brochure. You're welcome to message us. We'll email to you for free, and it'll give you a monthly update on the market and how the trends and everything going on. And this way, you yourself are more well informed before you enter the market.
And honestly, like if it was me, if I was a buyer that was getting into the market, I would just want to talk to a real estate agent that has experience, but somebody that's not going to push me. You don't want to push the agent right now. It's irritating. Like, the market, there's uncertainty, there's interest rates, there's this. I watch this news. The last thing you want is a real estate agent to be like, you got to buy now. You got to buy now. Talk to somebody that's going to educate you, that's going to treat you like their friend, that's going to, like, for me, I would not be pushing somebody right now, because I know it's not the time. There's a time to push because you're pushing them in the right direction. And there's a time where you just need to slow down and speak to them like they're your friend. Like, what, would you sell this property to your mother? Yeah. If not, then you shouldn't be selling it to anyone.
It's true. And that's the, moralistic aspect, I think, which unfortunately is missed in some businesses, like most businesses, which is why I think our team is good, because we don't, like, there's times when there's a project a client asks for, and we have consciously told them, hey, this project might not be good for you because the builders have canceled projects before. Yeah. Like,
that's huge.
It's cheap. Yes, it's at $300,000-$400,000, but will it be completed? No one knows. Is this something you want to do? And the same thing for now. Like, we have to be consciously moral to each other. So yeah, speaking of canceled projects, right now on the news,
terrible,
and like there are a lot of builders canceling. Yeah. What's your take on that?
Be very, very, very selective with the builder you choose. I mean, look, some projects can look really enticing. The location is nice. The prices are really good. The deposit structure is amazing. If it's too good to be true, it definitely is. So I would be really wary of that. But listen, not everybody knows this. We kind of had to learn this the hard way ourselves. We got involved with some builders that were not very experienced, and we lost some money. So not cool. It sucks that we had that happen, but it forced us to be very, very selective with the builders that we choose. So we work with experienced builders who have a lot of completed projects, not projects that are pending because anybody can have pending projects. Completed projects, have a good reputation, and have not screwed people over. Like, there are builders that will start a project, steal your money, then go and change the company. And change the corporation into a new one and open, and they just continuously do that. So you don't want to be working with scumbags like that. Not cool. And you have a lot of that in the pre-construction field. So work with good builders. Honestly, it's not always about the cheapest deal. It's about the best deal. Buy in good locations. Buy in locations that are thriving. like I said, where people are moving to, or there's public transportation, those are the areas that are going to thrive. You will get your money back. Spend a little bit more, get the better deal.
Exactly. Don't want to cheap out and then get nothing. Like, you know, it's. And speaking of the cancellations, there was a recent article, like there was 40,000 units, I believe, that are on hold or canceled. And just to put that in perspective, those 40,000 units, that it seems like 4,000 is a lot, but in the big game scheme, so 40,000 maybe is from 3 builders who aren't experienced, don't have any idea of how to do things, and they're trying things out, and then boom, now it's shafted. Now they're So these are the ones that were too good to be true, too cheap, and now they're project.
And they were just like, you know, like maybe they were not too cheap or too good to be true. Maybe that the builders were just not experienced, or they didn't have the funding, because who the hell was prepared for 9% inflation?
Yeah.
You know, who was prepared for this kind of supply chain problems, inventory shortage, supply shortage, like everything shortage, worker shortage, contractors. You can't even find contractors.
Yes.
So like things just got really crazy. And when things get that crazy, you need to have the right team that would be able to come up with creative ways and problem solve, and who have the network and connections to be able to pull it together. And good builders will be able to pull it together. Inexperienced ones, they're going to be the ones that are going to learn from their mistakes. They're the ones that are going to be talking about this in 10, 15 years maybe from now and go, yeah, we screwed up back then. Remember, we had to cancel 3 projects. But that sucks for buyers. So unfortunately, it is what it is.
But that's, exactly. Work with the team who knows who choose the right builders for you to buy. Like even today, I remember we were working on the final project narrative for this client. We found this project. I'm like, but we looked into deeper and said, oh no, this is like their first house.
Their first project? Nope. Sorry.
Yeah. So we just switched to a different builder, Empire, as another builder, which is a trusted builder.
They're good. They're very good,
right? So we're like, okay, let's, even though it's a little more pricier, but it's a trusted builder that at least we can be consciously moral to give to our clients, right? And because we don't want to just give our clients anything. Oh yeah, here it is, and this is the price range you're looking for. But by the way, the builder is might not complete.
Well, not only are they not getting their house, you're not getting paid, and they're not going to be able to actually do anything with that money the same way in 3 years. So if they've given $100,000 to that builder, and now because the builder will give that deposit back, or they're protected by Tarion, but what happens? The opportunity cost, right? You could have used that money to put towards another investment. So you got to be really careful. Be selective with projects and with builders. Talk to real estate agents that are experienced in this area, and get their guidance, right?
And that one, speaking of that, like the builder, one of the project our builders we really trust in is like Smart Living is one of the up and coming builders. I really love that building because they're the ones who build the Walmarts. I'm sure everyone's seen the penguin signs. So they're a public trade company, trusted builder. They have I think it was a 100-acre project, massive community project in Vaughan right now. So that project, like that is a builder that right now we push to clients, and they're very happy. Like they feel safer too when we tell them like, oh, this builder. By the way, this builder has done all this, right? So, and another one is Westline. Westline was
Center Court.
Center Court. Another up and like. They've been around for a bit.
They're great. Center Court, great golf. Tridell.
Marlin Springs. These are builders that are really trusted that you can work with, and that whoever's listening, that if you get someone who offers you that project, know that these builders are great, right? And you have to now especially pick builders as we've been pounding that information through. Like they have to be experienced. They have to have a good background on knowing what to do things, because these are companies who they are the ones who actually account for these inflations. Like they're like, hey,
that's true.
They're the companies who actually do account for these things, right? And the builders who don't, that's where you have the cancellations.
Well, they're huge companies. They do a ton of research and development. Like they do so much research on markets and stats and development, and I don't have the background or the team to do something like that, so I rely on them. So if they pick an area, then I know it's good, right? So that's kind of my take on it. But even if you're not gonna, even if you don't want to work with a realtor, just go on site, go online and do a little bit of research. Honestly, like look at some of their completed projects. You could find it. Everything is available online. So do your research. Don't go into anything blindly. This is not the market to do that.
Exactly.
Yeah.
And speaking of like the other tips of, earlier was, look for was near a highway, is there infrastructure coming there, hospitals, schools. Another one that I've learned was Costco.
Yeah.
Costco is another company that does huge, massive research.
They do.
Right? So they will never put a Costco in a community that isn't going to be thriving.
Yeah.
So there's always a Costco in a community that's thriving. So Costco is another indicator that I myself look for as well. Like, oh, is there a Costco? It's like the project Serenity Bay we bought.
Yeah.
I was a little worried, for everything going down, but I just a little more research. Oh, there's a Costco there.
Well, Grant Cardone. Cardone buys apartments and he buys real estate in areas. He says Whole Foods, Starbucks, and I think Costco was there.
Yeah.
And a few of these like really big companies because they do so much. So now every time I'm driving somewhere, I do the same thing. I'm looking for a Starbucks. I'm looking for like Whole Foods or things like that.
Because they're companies that they know they
can't afford to lose. Like they can't afford to screw up on the area.
No, because if they screw up with that, heads are rolling. Can you imagine the millions of dollars you're putting? Like,
oh my god!
Because think about, we're buying a house, we put like a few thousand, 100, whatever.
100, 150,
whatever.
200, whatever.
They're putting millions of dollars into this project, buying the land, building it up, marketing, all that stuff, hiring the staff, everything. Millions of dollars. So if that store is not doing well, heads are going to roll. So so that team, it's not like a one or two people on that team. It's like a massive team of people who are going to do that research for you, where you don't have to do it.
Yeah, exactly.
Right. So like, just sometimes just indicators you just have to look for. Where, and then of course after you look at the builder research, have they done, how many projects have they done? Any cancellations? These are all at your fingertips. And if you don't want an agent, sure, there's us. But you can do yourself, but there's also us. We do look a little deeper for you. We can get the units you probably want, because if you do it yourself, if you go to a builder, maybe you won't get that unit you want because you don't have the connections with them at that point, right? But those are things you have to look for, like, and you will feel safer too, right?
I would definitely sleep much better if I knew I picked the right builder.
Exactly.
Sure.
I just picked the right area. Like, you want to do things to make yourself sleep easier, and these are indicators that will help you sleep at night. Especially when you're putting a few $1,000s down. Yeah. It's a little weight on your shoulders.
Yeah, but it's okay, people. Sleep calmly. Everything will be okay. Yeah. All right, I think we'll wrap it up here. Wait, I had the top 10 cities up here. Damn it.
Fine. Oh, you just say no, or you just cut it in.
Before I let you guys go, I had actually pulled up the 10 most expensive cities in the world to visit. Singapore, what do you think is the
most expensive?
I just said it.
Singapore?
I actually pulled this up, and I want to tell you guys the 10 most expensive cities in the world. Singapore, what do you think is the second one?
Hong Kong.
No.
Shanghai.
No.
Dubai. Yeah, that makes sense.
No.
England?
Nope. I'm going to say
in London.
France.
France?
Yeah,
really?
France. Yeah. Oh. Most expensive cities in the world, France.
But I would say France does have a lot of like social programs that do help. Like, but anyways, sorry.
Hong Kong.
Oh, see?
Zurich.
Yeah. Germany.
New York.
Yeah, for sure.
Los Angeles. Yeah. Tokyo.
Oh, yeah.
Dubai.
That's right, yeah.
Sydney.
That makes sense.
That makes sense.
And London.
Oh, Toronto's not even
We're not even on there. See, we're not even on there.
Saying. That's why I'm saying Toronto's got a long way to go, guys. Come on, step it up. I know you guys were waiting for Toronto. That's why I did it.
But I knew, like, we're not, like I said, we're not even like in the top 10.
Yeah.
And then people are I mean, don't get me wrong, it is expensive, Toronto. Like,
it is expensive.
It is. But comparably to big cities, like all those big cities, not even close. Like, speaking of Hong Kong, a Hong Kong parking spot sold for $1 million USD.
Stupid. That's dumb.
$1 million USD for a parking spot. Can you believe? I was just like,
I would literally move my stuff into that parking lot.
Yeah,
I'm living
here now. I don't care what anyone says. Like,
I live here
pay
now.
$1 million for a spot. I'm going to do whatever I want with it. But yeah, so I'm like, don't stress, but be informed. Do your research, and if you do your research by not looking at these, don't look at the wording of like
crash is coming,
yeah, or
everyone's
emotion.
getting
Yeah.
screwed.
To look at emotion wise, look at numbers and look at the numbers by looking at numbers of past year trends compared to other cities who are comparable to us, and you'll see that you're like, you know what, it's okay.
Yeah. Yeah.
Yeah.
Awesome. Good talk.
Good talk.
Thank you for listening to another episode of the Real Financial Freedom Podcast. Catch us on the next one.